Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Tata Steel ends the day down 3% after announcing it will acquire Usha Martin's steel business for up to 4,700 crore rupees. Usha Martin gains as the deal is expected to help the company clear almost all its debt. Yes Bank board to meet tomorrow. Sources say the key issues on the agenda are Rana Kapoor's future role and the search for a new CEO. That's a CNBC-TV18 exclusive. Those are the headlines at this hour. This is the show where our team at CNBC-TV18 gets you the top stories of the day. I'm Arundhati Ramnan and you're watching Reporter's Diary. Straight to all the day's action on the markets. The Lal Street witnessed Monday blues as major indices slipped 1.5% and ended the day at 2-month closing lows. Now, the broader indices too saw a drop of over 2% each. Over 80% of the Nifty fall was led by financials, with HDFC Bank and ICICI Bank being the top losers. Anuj Singhal is here with a wrap of the day action. Anuj, decode this panic that we're seeing on the Lal Street for us.
Well, there are market cycles and there are market cycles. This is one of those cycles which is playing out. And frankly, it's classical case of market moving ahead of the curve. The market peaked out and moved from greed to fear in a matter of a month. It moved to a put-call ratio of 2 and we were worried that perhaps something is amiss here. Triggers always come later. The market senses it first and the market did that. Now we are of course talking about crude, rupee, debt freeze. This market knew about it all along. And the best example of that is the way some of the large haloed stocks have fallen. Nothing is sacred in this market. Bajaj Finance is now corrected 25% from highs. Eicher Motors, HDFC Bank are all down about 15% from the highs. Again, the selling had started much before, all these problems had surfaced. A lot of these stocks had started to see selling. So the market was always a step ahead of all of us and was giving you all these indications. Now, the obvious question is what next? Look, if you're a trader, this is a moving trade. We are in expiry week. The bears have all the momentum. 10,950 is just the last remaining support. My sense is it's a matter of when and not if it goes. 200-day moving average of 10,750 is likelihood. The market likely to panic at extreme or likely to bottom at extreme panic now. You could be looking at, say, a put-call ratio of 1 or 0.9 to 1. That's where historically it bottoms out. We're at 1.05 right now, which may coincide perhaps with this expiry, but things are looking rather weak right now.
So the bears, they're tightening their grip on the Lal Street. Thank you so much for taking us through those details, Anuj. Moving on to the crude market, the crude oil prices continue to surge on the back of tight supplies. Oil prices jumped more than 2% to a 4-year high today. There were two key factors which spiked up oil prices today. So the first one, over the weekend, the Middle East dominated the Organization of Petroleum Exporting Countries, and Russia ruled out any immediate hike in crude output. This effectively is being seen as a huge setback for Donald Trump, who has been seeking an increase in global supply, even as the deadline for U.S. sanctions on Iran draw closer. And that's not all. Saudi oil ministry has also rebuffed Trump's claim that OPEC is pushing oil prices up, which is not true at all. To discuss this and more, we have Manisha Gupta joining us now. Manisha, over to you.
Well, thank you so much for that. Yes, those factors, and I'll add a couple of more to that. One, of course, has been the Iran sanctions and reports suggesting that 1.5 to 2 million barrels per day is what could be knocked off the market come the month of November, that deadline actually. Apart from that, the markets also have been working with a global demand at 100 million barrels per day for the first time expected in this year itself. You also have the U.S. crude inventories lowest since 2015. And as you mentioned, there are reports from JP Morgan, from Trafigura, from Mercuria, calling crude oil prices at $90 to $100 per barrel as well until 2019, early 2019 that is, and that really has been pushing the sentiment on the higher side. Let's also get in a view, and Bart Malek, Director and Head of Global Commodities, TD Securities, now joins us on the online from Canada. Bart, hi, pleasure to have you. What has been your sense, the kind of run-up that we have seen in crude oil prices? The fundamentals have been strong, but is the kind of price move that we've seen today, is that justified really?
I think it very much is. what we're seeing here is a fundamental tightening in global supply-demand conditions in the crude market, and much of this is because the United States is imposing tariffs, restrictive, regime on Iran, and that means countries like India, for example, South Korea will be searching for oil from other sources. Problem, of course, is the United States said they would retaliate against companies, shippers, and everyone else who is involved with Iranian oil. As such, we expect quite a significant decline from that country to the rest of the world, and that means we're going to need crude from somewhere else. At this point, it looks like Saudi Arabia. There is enough spare capacity for now, but it also means that spare capacity globally will come down to very critical levels.
But also comment on the fact that, India issued a statement saying that they would cut imports if the crude oil prices continue to rise, also because the Indian rupee has been depreciating, so imports for us have been expensive. Do you think the consumer countries will start cutting imports if the prices continue to be where they are?
Well, I certainly think that is going to be very hard to do in the short run. As you've mentioned at the beginning of the segment, we are at 100 million barrels per day range in demand. We are expecting another 1.4 to 1.5 million barrel per day increase next year, while there will be a demand response, but this usually takes longer than, a few quarters before markets can adjust. As such, we could very well see testing of 2014 highs if we see any sort of disruption in the Middle East, any sort of military action in the Straits of Hormuz, for example, could easily spike crude towards $80, $90, because technically, for example, there are very few resistance points right now, and we could see significantly higher prices still.
So are you in agreement that we are headed towards $90 per barrel before we end this year or early 2019? Is there a timeline really?
At this point, it's still not our forecast, but from a trading perspective, we would say that that's not a bad target as a short-term, daily or intraday target, at least on a temporary basis.
So, about what exactly is the range you're working with for the crude oil prices?
Well, we're looking at right now average price for the next few quarters around $78 to $80 Brent, but with the understanding that because of the technical configuration in this market, that we could easily go another $10 without any sort of problem. Our official view right now is a price of $78 for the first quarter for 2019. But as we've already seen, this could very well be too low. We forecast average prices, which is a little different than looking at the possible highs. But this could go significantly higher given the right set of circumstances.
Wow, that doesn't sound good at all, Bart. When you say it could go significantly higher from here, $90 is what you've been saying. But, one final question from me. And with the U.S. midterm elections coming and the U.S. pushing for lower crude oil prices, how much of a stronger push can that be, and would that have an impact on prices?
Well, certainly the United States president's dislike of oil prices may translate into significant pressure on the rest of the world. The problem, of course, is it's only Saudi Arabia that has the capacity. There are a few other Gulf states as well, but certainly there is no political clout that he can use with Russia unless some sort of other deals are made in the background. And at this point, Saudi Arabia has to be very mindful of not to alienate its allies that help them to move the price this far. And they're going to argue the case that they are matching supply and demand. And at this point, there's really no reason to do anything except what they were doing. As you know, over the weekend, they tactfully refused to increase supply at this point. But never say never. OPEC does realize that if crude goes into the 90s and maybe triple digits, that will incentivize other producers around the world, like in the United States, shale producers, offshore producers, all over the world, and they could have the same problem as before, potentially lower demand and more supply. They certainly don't want to do that, but at this point, the calculus must be that at $80, maybe $85, it's not enough to kill demand, nor is it enough to incentivize massive new investment, at least in the near term.
But your point is very well taken. So that is one more voice telling you that 80, 85, 90, even 3 digits for the crude oil prices is not ruled out. Arundhati, 3 digits, that's scary.
That's a scary number for sure. Manisha, thank you so much for taking us through those details. Now, moving on to the trade war between the United States and China, which has entered a new phase, with both countries going ahead with the imposition of new round of tariffs on each other's goods. Now, while US is targeting Chinese imports worth $200 billion, China has hit back with tariffs on American goods worth $60 billion. China has also accused the US of engaging in trade bullyism and intimidating other countries to submit to its will through such measures. On Reporter's Diary, a quick look at the aviation space. We told you first on the 12th of August that cash-strapped Jet Airways was looking at selling stake in Jet Privilege, the frequent flyer loyalty program subsidiary, in a bid to shore up funds. Now, CNBC-TV18 learns that TPG Capital and Blackstone have already submitted their financial bids. Kritika Saxena, who broke that story, joins us now. Kritika, what's on the table for Jet Airways?
Well, as you said, TPG and Blackstone have at this point in time submitted their financial bids for this, and we understand that Indigo Capital Partners and Singapore's GIC are also likely to submit financial bids later this week. We haven't seen any bids come in from the foreign airlines. For instance, Delta, KLM, a couple of other foreign airlines as well had submitted expression of interest. So we'll need to wait and watch out to see if there are more financial bids that come in. October 5th is the timeline till when Jet Airways is likely to be accepting offers. But just to put this into perspective, the bids that have so far come in from these two players are between $350 to $400 million. Jet Airways isn't happy with this. We understand that Jet Airways was actually expecting almost $500 million. Here's why. Now, a global consulting firm called On Point Consulting had done a valuation of frequent flyer programs across the board. So that particular report had found Jet Privilege 31 in the list of top frequent flyer loyalty programs and had valued the program at $1.13 billion. So based on that alone, the valuation of that 49% that Jet Airways has should be at least $572 million. So we need to wait and watch out to see if more bids are going to be coming in. October end is the timeline that Jet Airways is hoping to conclude the deal. And again, just to put this into perspective, Jet has 49%. So they may look at holding a minority of 2 to 3% more. That's just going to be a matter of negotiation once the deal is done. But 51% is still with Etihad. So it's important that Etihad sign in on the deal. And if the deal does go through, Jet wants to retain some stake, retain the loyalty of their customers, almost 8.5 million subscribers on Jet Privilege. But over and above that, Etihad seems to be the one that may have the stronger footing here.
Absolutely, Kritika. So Blackstone and TPG there have already submitted their bids, and we're going to have to wait till the end of October to see who else will. Thank you so much for those details. Now back to the headlines from Deal Street. Tata Steel ended the day down 3% after announcing it will acquire Usha Martin's steel business for up to 4,700 crore rupees. On the other hand, Usha Martin gained as the deal is expected to help the company clear almost all its debt. In a conversation with CNBC-TV18's Nisha Podar, Tata Steel's MD and CEO TV Narendran said that the company is conscious about the debt levels and added that this is the right time to invest in the steel sector.
These inorganic opportunities come to us at different points in time, and we need to be ready to seize it when it comes to us. The organic opportunities are more in our control, and we've continued to grow in Kalinganagar, as you know. So I would say that we will evaluate each opportunity for what it's worth, for its value, and take a call based on the attractiveness of the opportunity, our ability to go ahead with it. Obviously, we are conscious of our balance sheet and the debt on our balance sheet and what we can and can't do. But it is also, we believe, a good time in the cycle, and the steel markets globally and in India are quite strong.
Sometime you had said that 26 million tons is going to be your aspirational capacity in India. You've reached that. Now, are you going to end here? Is Bhushan Power and Steel still on your table?
It is on our table just now, simply because it's going through the courts at this point in time. We will go through the process. We will cross the bridge when we reach there. But as of now, we are part of the process, and we will wait to see what the outcomes are of the courts.
What is your deleveraging plan from here on?
We would be reducing debt by about 20,000 crores or thereabouts. That will be first step. Second is, if you look at the current level of earnings and cash flow generation, we have a definitive plans of gradually reducing our leverage while we are still going to grow organically in Kalinganagar. So we are looking at positioning ourselves on a net cash flow level after the growth, and I think the next 3 years we would be happy to maintain our balance sheet post the deconsolidation of the JV, use the cash flows mostly for the organic growth and for the surplus cash flows then to be deleveraged. And we're looking at parts of the portfolio also, which is also a part of an ongoing exercise.
This particular month, you have seen some price increase. Next month, you're geared up for more. How is the cycle looking? And in terms of performance, it's going to improve for this quarter as well.
Well, steel markets have been strong, despite the fact that this is traditionally a weak quarter. In India, the demand has been growing quite well, I think, across sectors. Generally, if you see, exports from China has been dropping month on month for the last 2 months. Okay. It went up till June, but it's been dropping, which gives some sort of balance in the international markets as well. So domestic demand is strong, and that's reflected in the fact that normally you don't increase prices in September because this is typically the weak quarter, but the market was strong, the stocks were low, and to some extent the rupee helped.
On that note, it is time for us to take another short break. But coming up next, Yes Bank board is likely to meet tomorrow. Sources say the key issues on the agenda are Rana Kapoor's future role and the search for a new CEO. Details when we return. Stay tuned. Welcome back. You're watching Reporter's Diary. On to the real estate corner now. Blackstone-backed Embassy Office Parks is expected to file for the listing of the country's first real estate investment trust today. We learned that the listing, with an offer price of 5,250 crore rupees, is touted to be Asia's biggest office REIT listing. Kevin Lee is here with all the details. Kevin.
Well, it's been a long road to get India's first REIT listing, and now we're one step closer. Blackstone Embassy expect to file their 5,200 crore rupee REIT by the end of this fiscal year. They're hopeful that they could do it by January, is what sources tell me, but they're keeping March 2019 as that hard stop. It is going to be Asia's biggest REIT by size because it's spread over 33 million square feet. This contains 24 million square feet of completed assets and 9 million square feet of assets which are under development. It's 11 assets between 4 cities of Mumbai, Bengaluru, Pune and Noida. This includes the building Express Towers in Nariman Point in Mumbai is a big part of that. Now, 6 assets of the 11 in the portfolio are 100% owned by Blackstone, whereas the remaining 5 are a mix of Blackstone and Embassy assets. Also, this REIT will have the right of first refusal for any future Embassy projects. Embassy is developing office space worth 50 million square feet. So once those projects are complete, this REIT will have the right of first refusal for that. So India's first REIT right around the corner.
Absolutely. Thank you so much for those details, Kevin. On to Yes Bank now. After the RBI curtailed the tenure of Yes Bank's current MD and CEO Rana Kapoor to the 31st of January 2019, we learned that the hunt for a new CEO will be the top focus at the bank's board meet tomorrow. Ritu Singh is here with the exclusive details. Ritu, who are the possible candidates and what will be Rana Kapoor's role post the 31st of January?
Well, those are exactly the 2 things that will be key on the agenda as the board meets tomorrow. It is a critical meeting. One, of course, is finding a successor to Rana Kapoor. Now, the strong internal candidates that are seen in the fray include the likes of Rajat Monga and Pralay Mondal. It is likely that the bank will set up an independent search committee and rope in an external advisor as well to go through this process and finally submit the name to RBI for their approval. Interestingly, after the 2015 June, Bombay High Court verdict, which was the legal tangle between Rana Kapoor and Madhu Kapoor, the wife of the late founder Ashok Kapoor. Now, both of them have rights to nominate the CEO member to the bank. Will they or will they not exercise that right? Because they are warring promoters, they may or may not agree on a single name. That remains to be seen. But the other bigger question is the role of Rana Kapoor himself in the bank. Remember, right now, by virtue of being the MD and CEO of the bank, he also serves as whole-time director. But, given that he has to relinquish that position, the legal opinion opinion is that he also therefore gives up his position on the board. Now, there is a clause in the Articles of Association of Yes Bank that says that as an Indian partner whole-time director, he's not liable to retire by rotation. But at the same time, there is the Banking Regulation Act, which says, if a whole-time director is removed, which he will be if he steps down as MD and CEO, he's also not liable to be director on the board of a company anymore. So how do the two play out? Really, that remains to be seen. And, the wider opinion among the industry is that this may end up in the courtroom.
Right, Rizu. Thank you so much for taking us through those details. With that, it is a wrap on this edition of Reporter's Diary. Many thanks for watching, but stay tuned to CNBC TV.